The COVID-19 pandemic was expected to prompt foreign companies into divesting from China. Can surveys of multinationals in China put this belief to the test? And outgoing U.S. President Donald Trump has tried decoupling from China, but have economic trends matched this decoupling rhetoric? Welcome to The Point, an opinion show coming to you from Beijing. I'm Li Xin. Goodbye globalization, hello localization. China-led globalization is coming to an end, or U.S. companies are definitely leaving China. These are some of the quotes from some media, business experts, or even international banking groups, which made headlines earlier this year. They echo the skepticism over globalization, which has been on the rise over the past few years. Yet, latest surveys conducted by foreign chambers of commerce in China seem to have mixed results. Exactly how confident are foreign businesses in China and why? I'm pleased to be joined for the discussion from Beijing by Steve Lynch, Managing Director of the British Chamber of Commerce in China, and from New York via Skype by James Nolt, Adjunct Associate Professor at New York University. Gentlemen, welcome to The Point. Now, let's take a look at the surveys. As I mentioned, both British and American chambers of commerce in China have conducted business sentiment surveys in November and December on a total of 380 foreign companies in China. 124 companies were surveyed by the American Chamber of Commerce in China, or MCham. It shows 54.8% of companies are more optimistic about doing business in China in the wake of Joe Biden's election win than during Trump's term. 8% are much more optimistic, while only 1.6%, or just 2 companies, are more pessimistic. So let me go to Professor Nolt first. How come these results seem to contradict the headlines that I was reading out in the beginning of this program? Exactly what are the sentiments of American businesses in China in general, and why?
Well, I think there's a tendency to exaggerate the impact of COVID-19. Certainly it's been profound, but it's also temporary. And a lot of people have talked about decoupling or deglobalization, but I think the evidence is so far it's happened to only a limited extent. And a lot of American companies long established in China have reasons to remain. I would say the vast majority of them do.
But it is not just the COVID-19 that have impacted on American businesses, but also over the past 4 years, basically very hostile environment, very harsh rhetoric, especially coming from Washington. Do you see those policies or those rhetoric having an effect on the ground in these numbers?
Again, only to a limited extent, in part because I think most American businesses had already factored in that Trump was a temporary phenomenon. His trade policies have been very different from any previous president. The Biden policies are likely to be considerably different than Trump's, and I think to some degree a return to normal. So I think a lot of American business have figured that Trump's trade war, which went on for a year and a half to 2 years, depending on the specific tariffs you're talking about, is a temporary disruption and not necessarily a permanent change in U.S. policy.
Well, during the initial outbreak of the pandemic, some analysts and politicians were stepping up their call, let's say, for businesses or especially essential productions such as medical equipment to move back away from China to the United States. Is that trend, if at all, still happening, Professor Nolt?
Well, I think we'll have to see the policies of the new administration regarding detailed things such as, let's say, production of essential medical equipment. I would think there'd be some reason to have at least some reserve capacity available for emergencies in things like medical equipment, because we know that there are times when you can have severe national or international emergencies that may require rapid response and not necessarily in time to ship materials from overseas. So there may be a reason to revisit that question to some degree, but I think in terms of the broad picture, a lot of the world economy remains very well integrated, that there are a lot of products that are only made in one or a few countries, that trade is essential in order to create most complex products. So I don't see a significant decline in the integration of the world economy.
Well, we'll come back to that in a moment. Let me go to the British survey and to my guest, Steve Lynch. Now, the survey conducted by the British Chamber of Commerce in China indicates that 44% of businesses intend to increase investment in their operations in China, but that is noticeably lower than last year, where the number stood at 60%. However, figures of both intentions on expanding investment or optimism over China's market, as I said, not however, but as I said, have dropped this year. So Steve, help us understand exactly what happened over the last year that brought these numbers down considerably, and do they represent the overall sentiment of British companies here in China?
Well, I think as you know, as you can imagine, COVID-19 has completely dominated 2020, but despite the depth of this economic disruption, British businesses broadly remain resilient. They remain committed and optimistic about the China market. As you mentioned, 49% of British businesses are still optimistic about the China market. And in fact, 44% will be increasing their investment in 2021. And when you consider the year that we've had globally, when you consider the year that we've had here in China due to the COVID-19 pandemic, I think that's a pretty astounding statistic that British businesses are still broadly optimistic and they'll be increasing their investment. And the majority of businesses, 82% of businesses will be increasing their investment because of the potential of the China market.
Well, it is kind of, unbelievable to hear that. If you have been reading the press, right, the kind of headlines I was reading at the beginning of the show, you would really feel that there is a very strong sentiment of deglobalization, especially the China-led globalization and the kind of decoupling, given the kind of harsh rhetoric that we have seen between China and between Beijing and Washington. And yet it seems that the picture is quite a positive one. Steve, how do you help us understand that?
Well, I would say it's broadly an optimistic and positive situation. Let's not forget there are still major market access barriers which are prohibiting British businesses and foreign businesses investing further into China. But as we say, China is one of the largest and key markets for British businesses. Over 2/5 of British businesses say it's the top investment destination globally. So I think when we talk about decoupling, when we talk about deglobalization, is this actually what we want? Do we want to pull apart multilateral systems? Do we want to pull apart supply chains? Do we want to pull apart communications? So I think it's in both our interests, both countries' interests, to stand up to our values, but we need a robust and honest and open dialogue at a time like this to find parallels and complementarity of our two systems. I think when the world is facing a global pandemic, this is not a one country pandemic. We need to be working together. And indeed, when we look forward into 2030, 2050, we need to be working together around global issues such as sustainability, around decarbonisation. I think only with the world working together can we really achieve this.
On the other hand, there have been some reflection on the advantages and disadvantages of globalization, that the benefits of globalization, for instance, has not been distributed evenly, and that's why some people in some countries are particularly grumpy, let's say, about that, the world has been so globalized and yet their life has not gone better, or actually their life has stepped back. So, Professor Nolt, looking at the pictures that we are talking about, the foreign business sentiments in China, and yet the kind of rethinking that has been happening towards globalization, do you think things will change? Are changes happening so that globalization will benefit more people?
Well, I'd like to think that, and I do find that one of the bright spots in the United States has been the increase in political participation that we've seen in the last two elections. More and more people are getting interested, are trying to participate in politics, which is, I think, constructive, and particularly if the new administration, the incoming Biden administration, takes into account that that people want to see real results of economic development and not just the empty words. Words are cheap in politics. And that's one of the reasons why, as you commented, there are a lot of negative words about the U.S.-China relationship. There is a lot of frustration, as you say, with people who not particularly benefiting from globalization, yet seeing that some countries like China have benefited and have expanded their share of trade very greatly. And so there's a reservoir of resentment there that can be exploited politically. But what we really need in the United States is infrastructure investment and education development so that we can rise up together rather than have the economy stagnating and only the corporations that are profiting from globalization at the top really benefiting.
Yeah. On the other hand, look at the kind of wording that many people choose to use, the China-led globalization, you know, as if China is the only one benefiting from the trade with the rest of the world. And yet if you look at these businesses, the reason why they stay in China precisely because they are making good profit. So Steve, how
Correct.
how do you look at the misconception, I believe it is, that somehow China is the only one who has benefited from globalization? Is there another way, should there be another way to look at it? And is there anything that should be done on the part of, let's say, these multinationals?
Sure. So, I mean, as we pulled out from our sentiment survey, 82% of businesses are investing further into China because of market potential. But let's not say China has stood still here. They have, this is not the same business environment it was 1 year ago. It's not the same business environment it was 5 years ago. China this year in January 2020 brought in the foreign investment law. Now, the principles of the foreign investment law are welcomed by foreign businesses here in China. Unfortunately, this year we have not seen the material impact around the foreign investment law, and we hope this is due to China handling and mitigating the risk of the COVID-19 pandemic. But I think moving forward, we must expect, and we do hope, for China to further open them up, further reform, and further set that level playing field that all foreign businesses call for here in China. And certainly when China looks outbound, that level playing field is absolutely critical.
Is there anything that multinational companies can do, or the domestic company, the British government, for instance, to do, so that the globalization that these companies have been enjoying here in China are also trickling down to the people that are in need in the UK?
Well, absolutely. I think this is a time for a robust conversation in China. I absolutely welcome the conversation when we're talking about China, but it must come with informed voices and it must come with objectivity. So I don't think this is a time to pull away from dialogue. I don't think this is a time to pull away from communications with China. I think this is a time to invest further. I think this is a time where China needs to communicate with the world. I think it's a time that they need to have deeper bilateral dialogues with countries, and again, invest more into the multilateral systems around globalization.
Finally, Professor Nolt, you said let's not exaggerate the impact of the COVID-19 pandemic. What do you foresee post-COVID-19 when economies recover? Do you think they will continue globalization but with adjustments, and they will continue to invest more in countries such as China? Or will they retrieve, will they come back and localize, in the United States, for instance?
I think there's still a tendency toward globalization that's quite strong, in part because modern high-tech equipment is very, very complex, and each country is not going to develop the full product line. Typically, there'll be one or a few countries that have companies that are highly specialized in certain types of computer chips, for example, or certain technologies, and it's the advantage of the rest of the world to trade with countries or companies that have developed those things and not just try to reinvent the wheel every time themselves. And I think there's some exciting things happening right now. For example, the European Union and China have recently come quite far toward an agreement that would increase the openness of China to the foreign investment from Europe and increase the ability of foreign companies in China to manage their own affairs. That's the sort of thing American companies have been looking for as well. I think the new Biden administration wants to work together with Europe to try to negotiate a broader access to the Chinese market, both for goods and especially for investors. And so I don't actually see a retreat from globalization. I think it's still the trend throughout the world.
All right. Many thanks to Steve Lynch and James Nolt joining us for this half of the discussion. We'll take a short break, and when we return, outgoing U.S. President Donald Trump has tried decoupling from China, but does this decoupling rhetoric match economic trends? Stay with us. U.S. President Donald Trump has spent much of his presidency attempting to decouple the U.S. economy with the Chinese one and walk away from globalization. Some experts are saying the ongoing COVID-19 pandemic further increases the risk of deglobalization and withdrawal of foreign investment in China, yet others say such assumptions are misguided, overlooking facts on the ground. So has decoupling really happened? And will Trump's approach roll over into Biden's term? Joining me for the discussion from Hong Kong is Edward Sear, founder and CEO of Gaofeng Advisory Company, and via Skype from Philadelphia, Brandon Blackburn-Dwyer, president of Grasshopper Strategies. Gentlemen, welcome to the show. Edward, let me go to you first. You recently wrote an article saying desanitization and deglobalization never happened. Tell us, on what basis did you make that assessment?
Well, the rhetoric of that, happened really mostly during the peak of the pandemic in China. That was in first quarter of this year. I think since then, China has largely contained the pandemic, and the economy has been recovering. And we have seen data coming from China showing very promising growth. In particular, in last month, in November's trade data, the external trade from China to the U.S. Has broken records. And so I think also along the way, we have also seen how foreign companies has been operating in China. Many of my clients who are foreign companies actually has been doubling down their investments in China along this period, as well as supply chains are not leaving China. So I've come to that conclusion that none of this phenomenon that people talk about during Q1 of this year really happened.
Brandon, what is your opinion about this assessment? Do you agree with that?
The reality is the decoupling did not happen. I have to agree with that. Where I would disagree, though, is I think maybe in the cause. Q1, it's cliche to say, but it was a completely different world. In Q1, we were still mostly discussing the impact of the trade war. We were discussing tumultuous 2019 and the escalating tariffs back and forth. We were discussing whether we could have any dialogues between the U.S. and China. And then the pandemic hit, and the pandemic shut down China first, and then that depressed goods coming out of China substantially. It depressed it really through July, while China still was mostly buying kind of about the same what it was buying from the U.S. during that period of time. Then you had the United States shut down, and then you had the United States shut down through the summer, and you had a lot of people talking about what were they buying and where were they buying it from. But then you have consumers roaring back. You have what consumers found was all the money they didn't spend on travel, all the money they weren't spending going out for dinner, all the money they weren't spending on sort of those types of luxury items, they were now converting into purchases for their families, for their homes, for furniture, for new lighting, for new refrigerators, for things that are largely still made in China. And that has caused a huge, huge increase in the amount of goods being purchased out of China in the last few years, because companies were unable or uninterested in moving their supply chains out of China. Now, some of that was political, some of that was people betting that the Trump administration would be voted out, but other parts of it were simply logistical. It's almost impossible to change your supply lines while the entire world is shut down. If you want to move your factory to your country, you want to go to that country to see it.
All right, I see your point, Brandon. Edward, what is your reaction? Basically, Brandon was saying that when the pandemic hit, it just kind of disrupted the trend, if at all, of any actions, any plans to move businesses out of China, and people have so much time in their hand that they ended up buying. Edward, your opinion?
I think there's some of that. but I think there's also some deeper reasons why supply chains are not leaving China. China has been building up this capability on supply chain, in particular in more sophisticated manufacturing. What I mean is, manufacturing of products that required pretty sophisticated clustering of suppliers within a reasonable distance, where the key manufacturers need to be extremely capable in managing this vast network of suppliers in almost a just-in-time basis, so they can deliver very sophisticated end products to the customers either within China or outside of China. That is a core capability of the Chinese manufacturing that, for now at least, is very difficult for some other countries to replicate that in a wholesale manner in a short period of time. So, while some of this is a temporary phenomenon, some of this is also a very deep-rooted phenomenon, which talks to the strength of China's capabilities, as well as, of course, the size of the China market itself is significant, which therefore, become a very attractive place for a lot of companies to do business.
Right. Can I ask a hypothetical question then? If the pandemic never struck, okay, Edward, do you think there would have been a budding trend of deglobalization, decoupling with China, or not?
I think we have to remember that before the pandemic struck, there has been sort of the tension between the U.S. and China for wrong reasons, and in fact there has been a lot of, in a way, political maneuvering about the notion of decoupling, or encouraging American companies to leave China, or for the matter, Japanese governments encouraging Japanese companies to also move away from China.
Right.
I think those are all pretty politically motivated, that went before the pandemic happened. So I would say that those rhetorics will happen, and has happened actually, but the pandemic actually accelerated that.
Brendan, help us understand an apparent dichotomy that we're seeing. Look, the United States imposed very strict restrictions on Chinese tech companies. For instance, Huawei, ZTE, we all know that. On the other hand, the two countries are actually becoming closer in other areas, such as financial markets, right? The capital of Chinese companies listed on the New York Stock Exchange and NASDAQ has doubled from last year. Why the apparent dichotomy?
I think the dichotomy is more about the fact that the Trump administration didn't understand the markets. And by that, I mean that they kind of understood how to target China's tech economy, but they really didn't come around to targeting the influx of capital into U.S. markets until really the last 2 or 3 months. It was 2.5 months ago that the Trump administration, out of nowhere, announced potential restrictions on capital investments by Chinese companies in the U.S. markets. And that announcement, we were actually on the show talking about it, was then followed up with a resounding silence. And really the Trump administration kind of forgot that they even made that announcement, and they said, oh, well, it'll come into effect somewhere in December, or maybe in January, or maybe in 2023, which is highly unlikely to ever be a reality now that we're looking at the Biden administration taking over in 2021. So I think that the dichotomy is really about those within the Trump administration, those within the U.S. government that are anti-China, not having come to grips with that change in our capital markets, less so than there really being a preference to allow Chinese capital and not, while attacking Chinese tech companies. The same people that want to attack the Chinese tech companies want to attack the Chinese capital.
Edward, I want to get your reaction on the same question, or your explanation. And on the other hand, meanwhile, we're seeing the kind of restrictions placed on Chinese tech companies. In that sense, hasn't the decoupling actually happened?
Well, to some extent, the coupling has happened because of the restrictions, but underlying, our society, the role of the technology is omnipresent. It goes around the world, really, regardless of national borders. So to totally decouple, even from the technology standpoint, decouple China from the rest of the world, in particular the West, is almost impossible. So isolated decoupling, yes, but not wholesale decoupling. On your question about the financial market, you're right. The data have shown that actually a large number of Chinese companies have going to the U.S. capital market to raise funds, simply because the U.S. capital market is still the largest in the world. It has a lot of liquidity. There's a lot of institutional investors, investing in the various type of company. It is a good place to source capital. And as we also know that capital actually also doesn't quite care about national borders. They go for where profit is. And to be very upfront, China has generated a large number of very promising companies from the standpoint of their upward performance. And so from the U.S. investor standpoint, actually investing in the good Chinese companies is also a pretty good bet. In fact, even before the companies going to the capital market to go IPO, pre-IPO, a lot of the so-called venture capital funds or PE funds who are invested into Chinese companies are actually originally from the U.S. So there's a lot of U.S. capitals in the Chinese companies already, and of course Chinese capital in some U.S. tech companies. So the decoupling from the financial standpoint also is almost impossible.
Well, looking ahead, the fact that, or your opinion that decoupling did not happen as a mainstream trend, what is the spell for the future? What are the one big factor that companies have to look out for now that you say, decoupling really didn't happen, but is that all rosy? Is that all good news for business, for investors?
For me, right?
Yes, Edward, please. And keep it short, please.
Yeah, I'll keep it short. I think we're actually entering into a new era of globalization, which is synonymous with what the Chinese government is now talking about, dual circulation, from the standpoint of a domestic circulation, as well as an external circulation. What that means is actually that I think we are now getting in the world where China and Asia in particular, as RCEP is going to be coming into place, will play a very significant role in becoming a circle of supply and demand, whereas Asia, including China, will also continue to trade and do business with the rest of the world. I think that's the new world that we're getting into post-pandemic.
All right. Brandon, do you think that there's a good reason to believe the talk of decoupling since a couple of years should finally, be considered as real noise?
I mean, it's a myth. Some people will continue to talk about it. Some people will continue to believe it could potentially be real. But the reality is we are a globalized economy that is interconnected, and that's not going to change minus a massive, massive, massive shift that I think is unrealistic. China will continue to look more to its domestic consumers. The United States will look to diversify supply chains, and both economies will find ways to succeed both together and in competition.
Yeah, I think that's the wish of the multinational companies in China as well, both from the UK and from the United States. The matter of fact is, what kind of policy will be in place in the United States under Biden to make sure that the people, the middle class, instead of shrinking, will expand, right, under globalization 2.0. I have to leave it there. Many thanks to Edward C. and Brendan Blackburn-Dwyer. With that, we come to the end of this edition of The Point with me, Liu Xin. Follow me on Facebook and Twitter using the handle Liu Xin in Beijing, and go to YouTube and look for CGTN The Point. Thanks for watching. You've got The Point.